Welcome. In this video, Zbcn coin made a bullish pattern. Is pump coming? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. Looking at the chart from an overall perspective, the price action appears to form a rather remarkable structure. This is a classic pennant pattern that is often encountered in technical analysis, especially after strong bullish moves. A pennant pattern is formed when the price briefly consolidates in a sideways or slightly downward sloping pattern after experiencing a sudden bullish surge. These patterns often signal the continuation of a trend and offer significant opportunities, especially in strong trends. In the current chart, we can see that the price first moves sharply upwards and then moves in a horizontal narrow band for a while. This clearly shows us that a pennant pattern has formed. Pennants usually represent short-term periods of consolidation. Such patterns indicate that the market has entered a short respite, but the appetite for buying is still high. Therefore, pennant patterns usually have a breakout direction to the upside, and once the breakout occurs, the price has the potential to make a move as bullish as the pennant's starting point. In the current technical outlook, the price is quite close to the upper boundary of this pennant structure. This suggests that the breakout could be very close. Although the upper line of the pennant in particular acts as a resistance zone on the chart, such resistance is usually only a temporary barrier. If the price breaks this upper line upwards with a bullish candle, the pennant pattern will be activated, and there will be a strong confirmation that the trend is continuing. This sets the stage for the price to start a new bullish wave, and for traders to strengthen their buying positions. One of the most striking elements of pennant patterns is that the post-breakout target zone is quite clear and measurable. According to the rules of technical analysis, the post-breakout target in pennant patterns is usually the distance from the start of the pattern to the pennant consolidation zone. This means that, in the current situation, the price has a significant upside potential if it breaks out to the upside. For example, if the upward movement before the pennant was 30%, the price after the pennant breakout could go up by the same amount, that is about 30% more. At this point, market psychology should not be ignored. Technical patterns are not just lines and shapes. They are also visual reflections of the balance of supply and demand in the market. The formation of a pennant pattern actually indicates that traders are selling profits at high prices, but that new buyers are not immediately stepping in and letting the price fall. This type of equilibrium shows that there is still strong buying pressure in the market and that the price is willing to continue moving upwards. In addition, pennant patterns are often supported by volume. That is, there is a slight drop in trading volume during the formation of the pattern and a sudden increase in volume at the breakout. In the current situation, this makes the breakout much more solid and reliable if the price also experiences an increase in volume as it breaks the upper line. Bullish breakouts often boost investor confidence and support the sustainability of price action. In short, the technical analysis paints a very positive and promising scenario. The current price structure clearly reflects a classic pennant pattern that occurs after a strong uptrend. Within this structure, the price is now right on the verge of a breakout. If the price breaks this upper boundary and settles above it in the coming time frames, technically the pattern will be activated and the next bullish wave will have begun. This means that the price could gain significant momentum towards the pattern's target in a short period of time. It should also be noted that the most robust and sustainable rises in the markets usually come after the breakouts of such technical patterns. But we can't decide the analysis only by the pattern. Let's look at the other metrics. Stay tuned. When we examine the current structure of the price within the framework of the Elliott wave theory, it is possible to see that a very promising and high potential scenario is being formed step by step. The wave structure currently visible on the chart is developing in accordance with the 5-wave impulsive movement model, one of the basic building blocks of the theory. In particular, the successful completion of the first wave, followed by a horizontal and calm second wave, clearly shows us that a strong preparation phase for the third wave is underway. According to the Elliott wave theory, the third wave is usually the most prominent of the directional and strong movements in the market. The third wave is when the majority of traders become clear about the direction and start to open positions. Therefore, it is also usually the highest in terms of volume. In this context, in the current chart, it is technically quite healthy, and expected that the price corrects horizontally or slightly downwards for a while, with the second wave after completing the first wave upwards. This is because a short-term search for equilibrium in the market is required for a strong third wave to begin. Once this equilibrium is achieved during the second wave, the stage is set for a strong and accelerated start of the third wave. The current second wave looks very much in line with the classic ABC correction. The fact that the price is moving horizontally and slowly instead of sudden sharp declines is an indication that the correction is healthy. This is because this type of correction indicates that the selling pressure is limited, buyers haven't lost control, and there is only a small resting period. Also, the second wave usually makes a retracement to the Fibonacci 0,618 or 0,786 levels. Reactions from these levels usually herald the beginning of the third wave. If the price encounters strong buying reaction from these critical support levels, the third wave will proceed with much more confidence. With the start of the third wave, the price is usually expected to rise between 1,618 and 2,272 times the first wave. These levels are known as Fibonacci extension levels and are widely used in technical analysis. The 1.618 level in particular is called the golden ratio and is considered a very important psychological threshold in the market. Once this threshold is broken, most traders now recognize that the uptrend has begun in earnest and strong buying waves are formed. If the price reaches as high as 272, this indicates that the market has gained a lot of momentum and the trend has fully strengthened. From a technical perspective, the third wave is usually the longest and strongest, both in terms of volume and price action. This provides traders with significant profit opportunities. Traders who are patient and hold their positions, especially in the second wave, will reap the rewards of their patience in the third wave. The fact that the price is moving sideways in the second wave on the current chart sends a very important message. The market is resting and preparing for the next big move. This is likely to be a strong upward third wave. In addition, third waves are also periods when investor psychology is positively shaped, because the uncertainty after the first wave starts to diminish in the second wave correction. By the time the third wave begins, the majority is convinced about the direction. This causes the market to collectively move in the same direction. This collective movement of the market leads to large increases in volume and accelerated price appreciation. This is why the third wave is the period when traders make the most gains and the market experiences the clearest gains. When all these technical and psychological elements come together, it can be said that the current price structure gives very positive signals. The first wave was successfully completed. The second wave continues with a horizontal correction, which suggests that all the necessary conditions are in place for the third wave to make a strong start. MACD, which is a very important and reliable momentum indicator in technical analysis, is currently generating quite remarkable and promising signals on the chart. When we evaluate the current price movements together with the MACD indicator, we can clearly see that the balance of power in the market has started to turn into an upward momentum, and the first signs of a new uptrend are emerging. In particular, the new intersection between the MACD line and the signal line gives us strong clues about the direction of the price. The meaning of such crossovers in technical analysis is quite clear. They usually signal that a trend is likely to start or continue. The current crossover occurred when the MACD line crossed the signal line upwards from below. This suggests that the market is revitalizing on the buying side, and a potentially sharp move to the upside is imminent. The fact that this crossover occurred very close to the zero level indicates that the indicator is gaining strength, and a crossover into positive territory is imminent. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.